Good morning, everyone. I'm Charles Capers. I am a financial and business advisor with the University of Houston's Bauer College SBDC. And I'm up here with a panelist of lenders, and I know that we're the only people between you and lunch. And so we're going to try to make this as appetizing as possible. Panelists, I want you to remember that you're not under oath with the state, but you're to tell the truth, the whole truth, and nothing but the truth. And so our topic is having, as a small business owner, access to capital, particularly in underserved and low to moderate income areas, where it's often been more difficult and there's been a chasm and a divide with business owners having access to capital from major banks and other financial institutions. And so what we're looking at are some organizations that have come in to fill that gap. And they're not necessarily, there's a swath of lenders up here, but they're not all necessarily conventional banks. And so what we have are three what you call certified development financial institutions and then one commercial bank. And so we're going to talk about the differences in the lending landscape right now. And myself, I was in lending for 15 years with a few different banks here in Houston and in Ohio. And from what I can remember, capital is the engine of your business, okay? And if you took a poll of business owners and you asked them why they weren't successful, they would probably tell you that at some point they ran out of cash. And so cash flow was a big problem for them. And with starting up businesses, the businesses that don't make it are usually undercapitalized. I remember when I started out in banking, the first year I did $3 million in production, and then they were all lines of credit, just for capital, and keeping your business operations going. So having said that, rather than go in and do the bio on my panel here, I'm just going to give them the opportunity to introduce themselves and talk a little bit about their organization. So we'll start here with you, Bianca.
Good afternoon. I'm Bianca Truitt. I'm with Lift Fund. We are a community development financial institution along with the rest. And we are a nonprofit. We've been around 25 years, but we basically fill that gap for business owners who don't qualify with traditional lending. My background is in banking for the past 4 years. I've been with the company for 1 year.
Hi everyone, my name is Natalie Mojica, and I'm not going to repeat a lot of what Bianca just said because you're going to hear a lot of the same terms as we kind of talk and continue with this dialogue. But I am a loan officer for Accion in Texas, and we are a nonprofit that is just working with entrepreneurs that are, startup, they want to get it going or existing to get them the money to be able to get their dreams. And we'll kind of get a little bit more into that as we move forward.
Good afternoon. My name is Keone Gray. I'm a loan officer with People Fund, and People Fund is a community development financial institution as well. And we target minorities, women, veterans, basically those underserved communities that don't have resources or access to capital. And they're primarily our target market. We believe that creating economic opportunity and financial stability through small business is the way to create a fruitful, healthy small business as well as community.
Hi, everybody. My name is Elias Hernandez. I work with Spirit of Texas Bank. I've been in lending for the last 6 years with the bank. I'm the black sheep up here. We're a community bank. So I'm going to talk more about what services we have, full bank services that we have, or that community banks offer in order for you guys to be successful in your small businesses.
Thank you. So we're going to start some questioning here with the panel. I'm going to start out with you, Natalie. Natalie, what is a Cdfi, and how does it differentiate, or how do you distinguish yourself from a conventional commercial bank?
Good question. Really good way to start. So again, a Cdfi, that's kind of in short, it's a certified development financial institution. The way we are different than banks is that we get to be a little bit more flexible, right? Maybe we're not working under the same regulations as banks, but we can be a little bit more flexible with credit, right? How we're looking at credit. Maybe with the length of your business, so you start tomorrow, or you've only been in business for like 3 months, and then some other kind of different criteria. Certain industries that we're able to work with, because sometimes they're considered a little bit more riskier, right? Like restaurants or like transportation. We just really work to serve those entrepreneurs who don't fit in the box of traditional lending, right? There's like the 5 C's of credit, what everyone looks at, credit, cash flow, all that stuff. And sometimes there's one that's not there, but it's still pretty strong and we're willing to consider it. People then ask, like, how do you get your money, right? Because we're all nonprofits. While we're not a bank, we love banks. Banks give us a lot of money and lending dollars to be able to kind of in a sense administer that through the community, right? So we get a lot of funding from some of our banks, but not only do we get funding to be able to do what we do, but we also work with them on the ground to get those referrals, right? So when you think of a small business loan, the first place that you're gonna go to is a bank. And sometimes the bank can't do it, right? And they're so loyal to their customers and they really wanna serve the communities that they're in that they connect them to a Cdfi like Acción, People Fund, and Lift Fund. And we work with them. We work with them in the meantime as in their growth, their startup kind of phase. Eventually they can graduate from our programs and go back to the bank. And that's kind of how it's like, in a sense, Ray, it's a big ecosystem where we're all really just working together to help that entrepreneur get to the next level and get to their dreams.
Thank you. Bianca, what in your estimation are the most significant barriers and obstacles for businesses in underserved areas, minorities and so forth, to have access to capital?
That's a good question. I think one of the biggest obstacles would be due to a lack of education, just not knowing where to go. A lot of times, the culture is different in certain areas. So one culture may believe that debt is bad debt. Then you have another, they just don't trust banks or bankers. They don't know who to talk to, so they might keep their money in their home and not have that education on how to manage their finances, where to put it, where to invest it. So a lot of times you're right across from, say, a Baker Ripley, and you just don't know what they do. But I think filling in that gap with that education, knowing where to go, it starts there. Because there's so many resources out there with the city, the SCORE, Baker Ripley, there's many. So I think it's due to a lack of education, and then us also understanding the culture. Everyone's not the same, so we do have to approach them differently and just understand how to approach that market.
Thank you very much. Kiani, People Fund. I know you guys are very active in the community.
We are.
You have various programs. You have a veterans program. We were doing a veterans deal at our SBDC, kind of a boot camp for veterans to get their entrepreneur businesses launched. Can you tell us about what you guys do in terms of your community programs with education and training?
Yes, well, that's basically it. Through our partnerships with SBA, SBDC, SCORE, Texas Veterans Commission, some larger financial institutions, not only are we able to provide lending dollars, but we like to approach it from the aspect of education, because we believe that education can mitigate some of the risks that we're exposed to when dealing in these unsupported markets. So, for example, we have one that was basically catered around Hurricane Harvey, where some business experienced damage to their structures, it disrupted their businesses. So we provided basically low to zero interest rate periods for their loans. We provided up to 3 months of loan payments for clients through fundraising. So we like to approach it from an educational standpoint, because starting a business is difficult, but sustaining the business is more difficult. So once we provide these resources, not only that, we follow up post-loan, so we're able to provide marketing resources, help them get their social media initiatives off the ground. So that's what we believe will build a healthy business and a healthy community.
Very, very good. Elias, saying that correctly? With Spirit of Texas Bank, who I've worked with on several different projects, business plans, shameless plug for the SBDC, but we have business plans that we work on with small businesses. They referred me businesses, and I've referred them, just like everybody else on the panel. But being a conventional SBA preferred lender, can you talk to our audience about what the SBA Guarantee Program is all about and how it enhances small businesses' chance to have access to capital?
So let me start off by saying that being a community bank, the main thing that we look forward to is building relationships with our small businesses in our areas. I think that's a key component to us being able to lend and giving the small businesses the needs they need in order to be successful and grow. The SBA is a big part of our bank. We're actually number one in Texas, 27th in the country. I myself am not dedicated to SBA lending, but know quite a bit of it because I constantly send referrals to the experts at our bank. In the past 10 years that our bank's been in existence, we've lent out over $500 million in SBA funds. So that's a substantial amount. With that being said, a lot of that lending happens because we build strong relationships with these small businesses. We have a vast variety of products that we offer through our SBA programs. One of them is being the capital to buy a business, the capital to continue growing, buy franchises, equipment loans, accounts receivables. So we have anything and everything a small business might need. And SBA was set up for small businesses, the aid to be able to compete with the larger businesses. And we're very happy to be a partner of theirs, to be able to lend through them. So yes, SBA is a big component of our bank, and we want to continue to do that. Our bank's been a growing bank. We started off as a $300 million in asset bank. Now we're 1.3 billion in assets as a bank, and that has a lot to do with our small business relationships. Our relationships that we build, just like you guys as being small business owners, is a component of being successful and being able to grow as a business. And we're there to not only offer you the lending part of it, but also offer you the bank services, the banking, the checking accounts, and so on. And I think that me being a lender and having your checking accounts and your commercial business accounts and you guaranteeing your loans and so on, knowing your transactions and knowing your business and knowing what you go through day in, day out helps us a lot. And whenever you do need that cash flow or whenever you do need that loan, we're easily able to help you out with that. Our underwriters actually implemented one of the components that SBA follows now, which is not leaving the small businesses without the cash flow they need to continue growing. A lot of lending, when it comes to conventional lending, they want large upfront investments from the small business owner versus SBA. We want you to keep your money in order to keep on growing, and we'll lend you what you need in order to keep on growing. So that's a big component, I think, and it works out perfectly for small businesses. We have a great ratio in making small businesses successful, and we want to continue to do that.
Thank you. Yes, SBA, the agency there has a program to make it more amenable for small businesses who may not meet the criteria for a traditional commercial loan, such as an initial investment in the project of 15-20%. SBA has a program where you'd only have to invest 10%. They'll give you longer terms to pay out on your business loan. And what I see them doing mostly are working capital loans, real estate financing, and equipment financing. And so it's a very good program that you can inquire with any lenders. Now the CDF, I have a lot of loan programs that are SBA backed and guaranteed as well. And there is an industry or an avenue in the CDFI world called micro lending or microfinancing, because I think the average loan size in this country is about $325,000, but not every small business needs that much money or can afford to pay that much of a loan when they're first getting started. So they may need some small working capital. And so the micro lending industry is very important in underserved markets. Can you talk a little bit about that now?
I And so, again, I've talked a little bit already about what makes the CDFI unique and what we can do. And one of the really cool things that we can do are smaller loans, right? And small defined across this space could be very different, right? For a bank, a small loan could be like $1 million. For a CDFI or, a nonprofit like Acción, it could be like $500, right? And a lot of people talk about like, how can $500 have an impact? They can have an impact, right? Or even like a $2,000 loan when someone wants to start like a cleaning company. They just need a couple of cleaning machines and materials and they're gonna just start getting into it. So all the loans that we're kind of doing have impact. The microloans are so unique and awesome into the space that we're in because of the smaller amounts. It typically targets like those underserved populations that a lot of my counterparts up here have mentioned, right? The startups, they've only been in business for so long. The women-owned business, the veteran-owned business, the minority-owned business, the business owned by an I-10 borrower. Given their situation, they might not qualify for a larger loan at a traditional bank, but they don't need that sometimes, right? Especially with the education piece that we've all talked about. Getting into debt, you have to do it the right way, and have to know how you're doing it. So these smaller loans, by smaller, smaller, like under the limits that we do, right? Like 350,000 and under, help people get their feet wet. Into what it is to get business credit and business debt, and it does it in a healthy, sustainable way, right? When they're starting their business or they're in their growth phase, they have a lot being thrown at them. So you don't want to throw like $1 million loan at them if it's not what makes sense. You also don't want to underfund the businesses. So we also do it like our due diligence to make sense that like, okay, this business really wanted like 80,000, but given everything, we can't do 80,000, but maybe we can do 50, and it still would make sense. They may have to wait to purchase this equipment because it's not so needed right now, but it's a big part of what we do. Microloans are really, really neat, and they do take the same amount of time to work on. So that's why we work a lot with banks where it's like, I only want 25,000. The bank might refer it to us, or a traditional lender might refer it to us because we're okay with working on them. They take, the same amount of, we have to collect documents, we have to process. Some of the smaller loans can move faster, but the underwriting can take the same amount of time, right? And while we're in it, we're nonprofits, we're in it for the ones who do the microloans. We're in it for what we make off of it, but really, we're really in it to see the impact that we're having in these local communities, because these small loans are really moving the needle in the communities that we're in and the communities that we're serving. So that's a little about micro lending and what it looks like. And I know the SBA does have like a micro loan program, and we all kind of work somewhat in that space. But if not, we use our own lending dollars to kind of fund those loans and kind of get people going. When small amounts, you can eventually like refinance. Maybe the bank will refinance it for you, or you can refinance through the same CDFI and get a larger loan. So it's like a step one, let's open one door for you and get you going, and get you all the tools you need so you can get back to the bank or get to like a larger loan with us to help you continue to grow your business.
Thank you. Lift Fund, I know, is in the loan business as well. Bianca, can you tell us what the size looks like for a micro loan, and tell us a little bit about the 5 C's in lending in terms of what a small business borrower usually needs to bring to the table to qualify for finance.
Okay, well, our size for a microloan, as I mentioned earlier, starts at 500. We do go up to 500,000, but with our pool, we would go anywhere from 500 to say 50,000 before we work with the SBA to extend that. But it's the same thing across the board. Even with banking, we still have the 5 C's. So when a business owner comes, we hear a lot of times that magic number is $100,000. Well, we need to break down that $100,000. You might not necessarily need that $100,000. So as she said, as we are all flexible, we have a different scorecard. So with those 5 C's that we would touch on, it would be your character, capacity, your capital, collateral, and the conditions. So the character would be your credit score. That is something we're always going to check first. With the bank, it might be requested that you have a minimum of 650. With us, some of us might go as low as 300 or maybe 520, 590 average credit score. That does impact how much you qualify for. So that magic number of 100,000, if your credit score is a bit lower, we'll have to be a little more practical in that area. So knowing that number is definitely important. Your capacity. A lot of business owners think that they are separate from their bank, from their business, I'm sorry. So they're thinking, oh, I'm going to get credit, I'm going to get this business credit score, but you are your business. So as a personal guarantor, we're going to link you. So with that capacity, we're going to look at your personal debt to income always. Unless you're generating, say, maybe 20 million in revenue, a bank might not need to look at your personal credit score because that has spoken for itself, right? But you are always going to be your business, whether you're in for 1 year, 20 years. We have to know what your personal obligations are. Your capital. No one is actually going to invest 100% into your business. So we need to know what we call your skin in the game. What have you invested in your business? For us as a Cdfi, a new business would qualify for lift fund 0 to 6 months. With a bank, that's 2 to 3 years, right? So that's where we fill that gap again. So if you're a new business owner, we need to know how much are you willing to invest into your business. With that magic number of 100,000, we may be looking at 20% capital injection. So that's either what you have in reserves or what you've already invested into your business, which you should be able to prove through, say, your taxes or receipts. That is what we're looking for. Now, since we are not a bank and we don't have deposits to depend on, we look at collateral. That is a heavy piece in the Cdfi community. We need to know, say, if you're not able to secure that loan, we need to see that value, say, equipment, machines, things like that. That is what we'll use for collateral. We do look at other assets as well, but your business assets are very important. We're going to put a business lien on those assets. And the conditions, are the conditions right in the market? Do you know what you're doing? How long have you been in that business? The experience. If you are, say, a dentist and now you want to open up a hair salon, how practical is that for you? So those are definitely the 5 C's that we would look at. When you're coming to us, we do want a business plan. That you've heard that all day, right? The business plan is very critical. We need to know, what is your plan for this business? Is this a hobby for you? Are we investing in a hobby, or is this actually a business, a form of living for you? You need to know your numbers. The financial projections are very important. I, for example, had someone request $1,200. We would love that impact that she said to help you, but how is that $1,200 really going to help you as a new business owner? Do you really know your true cost of doing business? Because as someone mentioned earlier, we may grant you $1,200, but then you realize you needed $8. Now you can't get funding anywhere else. It's hard to come back immediately to get that funding. So you definitely need to know your numbers.
Thank you very much. Kiani, would you like to chime in on that? Typically, what would you like to see a potential borrower bring to the table with People Fund to qualify, and your average loan size and the markets that you've been worked in? I understand you have a specialty in the rural markets, and can you talk a little bit about all that?
Yes. Honestly, I believe as far as the client being prepared is just making sure they're asking the appropriate questions, no matter what lending institution they're going to. Asked about, is there fixed or variable rates? Is there any prepayment penalties? Refinancing options, any adjustments that could be made if I fall into some kind of bind and I need to adjust my payments. One thing that I see mostly is centered around the business plan. Most people don't put a lot of focus and attention into it, but that's really your blueprint that's going to direct where your business goes, begins not only now but in the future. And we also have some products, especially in those rural areas. For any startup business, it's hard to get access to capital. Any startup 2 years in operation or less. So we have products such as flash funds, where a client can get up to $25,000 in funding immediate with less documentation. They usually only require 600 minimum FICO score, and it has a turnaround time of 2 to 3 weeks. So with that, and with all of our products, we're holding a client's hands from that initial meeting all the way through the end of the process, and we're constantly following up with them afterwards. I believe that maintaining a relationship with your client to stay abreast of their needs is very vital. And just to piggyback on what Bianca was saying, when a client comes in and they request a specific amount, we're asking those detailed questions to ensure that they're going to be able to meet their needs with that amount. Have you considered the total project cost for what you're trying to do? So we ask them, is this going to be enough for you, or is this too much for you? And, each case is a case-by-case basis, but we just try to educate through the entire process. So not only if they have a delay in decision, it's not a denial with us. We never like to say no. We always like to follow up and make sure you're taking those necessary steps to correct whatever it is that's hindering you from moving forward with your business.
Very good. Thank you. Mr. Hernandez with Spirit of Texas Bank. I understand that you all have a program where you work with foreign investors, such as Mexico, to do business in Texas. Can you tell us a little bit how the program works?
Yeah,
and
that's
what you
correct.
do?
So that's another
Yeah.
business avenue that we deal with. What we do is we go out and we seek investors that want to come into the state of Texas to invest in developments and small businesses. This type of loan, of course, is a little bit more extensive and a lot more paperwork and so on. And I'll touch the same thing that they talked about earlier. Character for us is probably number one. We want to build a relationship. We want to know your characters. For us, it's just not about a credit score. We want to know the way your business works. And in this case, we want to know the way foreign investors' business works that are trying to move their business into the state of Texas. We do from, it's mainly commercial real estate when it comes to these types of loans because they need a warehouse or they want to buy a small business, a small office building, or whatever the case. It's mainly commercial real estate, but we're out there to help out in them building new jobs in the community and these small developments that they're doing and being able to help them when no other bank practically will do that for them. This part of the business in our bank was actually a combination of two banks that merged, where one bank was actually just doing foreign national lending, and then the small business aspect of Spirit of Texas Bank. And by doing that, we were able to create a product that would bring in this foreign investors, not only give the bank more capital due to checking accounts and deposits and so on, being able to lend more to our community, but also these foreign investors coming in and being able to offer additional jobs because of the construction that they're, the developments that they're doing and so on. So yes, it's something that we go out looking for additional business. But again, our main line of business is small business lending here in the state of Texas. We are a community bank. We are a relationship bank. We like to know our customers. We like to be able to have them be successful. I won't get into the terms of loans and so on. We just have so many types of products. I mean, if anybody was to come into our bank, I would believe that we would have a product for them. And we're very similar to everybody else up here. I mean, we of course, we want the multi-million-dollar commercial loan, but we also handle the smaller $100,000, $200,000, $300,000 loans. So we're an all-around bank that services the community in ways that, you think of a bank, it's like, oh no, they're just trying to charge us high interest and trying to, not help us out, but they only want to help out the people that are already successful. That mainly is not true in most parts, well, in all parts, because we're here to actually want to build more business, and the way we do it is by building relationships with these small business owners and making them successful.
Thank you very much. Well, with the time we have left, and we don't have much before our lunch break, I'd like to ask each of the panelists to share a success story to kind of illustrate what you do with small businesses in your community for the audience. We'll start off with you, Bianca.
Okay. Favorite success story. I'm coming from banking, so I had a customer. He had a food truck. His food was good, did very well, but he didn't focus on the business too much, should I say. So he didn't really know his numbers. That's something we educate on, knowing your numbers, right? He would come in the bank all the time. And again, I would try to educate him on understanding his business. Are you profiting? How do you know? He never knew. He just had something he loved, and he was out there spending money and serving food. Hurricane Harvey came, forced him to sit back, take advantage of the resources like SCORE, SBDC, and learn more and understand his business. Moving forward, he applied for a loan through Lift Fund. I happened to see his name on the list, reached out immediately. He was a little hesitant because people, getting a loan, they're just hesitant naturally. When he found out I was there because of our relationship, he decided to move forward. And just within this short year today, based on that education, him taking the time on his business, I got him, introduced him to someone at HCC because they have the procurement breakfast every month. He got a contract there. He's now about to be in the airport serving his food. So that's one of my favorite success stories, being able to educate him, help him understand his business, take advantage of those resources. And now he's about to be a brand name. And we helped him finance another truck. So that was good.
Fantastic, fantastic. Good. Natalie, same question.
This question is always so hard because I think we all have many success stories in the work and the kind of the line of work that we do. But I'm going to share one. It was actually one of the first entrepreneurs, or it was a couple that I helped. I'm based out of Dallas, but I service all of Texas. So these are two minority business owners, startup. They had a really cool concept. They were going to cook paellas, which is kind of like that Spanish rice, in front of you, right?
Delicious.
So at your apartment, inside your kitchen, at luncheons, whatever it is. And I was like, I think this is awesome, right? We didn't do a big loan for them. It was a small loan around like 10,000, but with that 10,000, they have done so much, right? So I think success is also defined very differently, right? Successful, we got them some capital for their business. It got them going, but I've seen success go way beyond that, right? So one, they've gotten to be like on all of our newsletters, basically, where we're showcasing them, getting them free marketing, free just networking opportunities. We invite them to cater our events based out of Dallas, right? It's a great catering opportunity. They meet with business leaders, community leaders that bring them to their events. And then this this Saturday, they're actually one of like the main caterers for this like really big conference that Univision is sponsoring called Posible DFW. And I'm like super excited. I just saw them post it on Instagram and I was like, this is amazing. So I think it was really just from the relationship of like connecting with a community lender, right? Like Acción, but then talking about the relationship that then you build personally with those clients as a loan officer or as a representative for your organization, and really doing more than just giving them a loan, right? Providing that technical assistance after the loan and pulling them into things that are just going to help them grow professionally, personally, and then their business. So hashtag Tasty Paella, I'm going to shout them out. They're pretty awesome. And they have already like opportunities for like franchising, and they're amazing. It was with an $8,000 loan that we were able to do that. So the loans, no matter what size, are having an impact in our communities, which is a great thing.
That's outstanding. Keanu, what can you share with us?
One of my favorite success stories would happen to be Margot Jordan. She's a African-American female as well as a veteran. She's CEO of Chicks with Class Empowerment Company. And she also does classic boys for young gentlemen. And basically, she said she woke up one day, had an epiphany of, trying to think of ways that she could give back to the youth and give them something that she never had when she was growing up. So she thought of different ways to empower young women. And she's basically the perfect example of resilience and having undeniable ambition. She faced a few personal struggles during the process, as well as some financial struggles that we were able to overcome. And not only did she get her initial loan from us, but she also followed up and was able to receive a Hurricane Harvey assistance relief loan because her structure was damaged. She used the funds to help repair that, and she's successfully been in business for a while now and doing very well. So we really like to look out for the community. We offer rate buy-downs for women entrepreneurs as well as veterans. Veterans can get 5 to 7% rate. Women get 2% rate reduction. And basically, we just want everyone to know that we are an option here. We walk a client through the full service. We don't want to let any client go. So if you have something today that's preventing you from moving forward with the loan process, we're going to stay with you as long as you decide to stay with us. And that's really on the business owner, because although we're here to help and we love to do everything in our power to help, no one's going to care about your business more than you do. And basically that's what we're here for. So you can feel free to check our website, peoplefund.org. You can see all the products that we have there in the various areas that we serve. Thank you.
Thank you. Elias.
My story won't be as long. It'll be a little quicker. I'll go back to we take pride in knowing our customers and building relationships. So I did have a customer that he was always meeting his daily needs. He was a small warehouse, import-export into Mexico, daily products. He could never catch up. So I started looking into, well, what's going on with this customer? And the fact was that his lease was just, I mean, he was paying a tremendous amount of money and leasing the property where a small warehouse he was at. And luckily, he was on his way out. He was at the end of his 5-year lease. And so we looked at options. You know, he's owner-occupied, SBA, like that. Sent him to my SBA department. We practically, the amount that he was paying in lease, for him to own his own warehouse, similar size, could run his business, and so on, he was paying half of what he was paying on his lease. Therefore, was able to grow his business and continue to expand. Today, we go back and we visit with him. He's doubled his business in about 3 years. So it's just a matter of, the guy had great character. I mean, good, hardworking person, knowing your customer, being able to help them out at the right time, and we get success stories like these.
All great stories. And with the little time that we have left, are there any questions for our panelists?
In listening to each one of you, I gathered that you have a range of loans that you may offer from low to the high. Could you go through what each one of your groups would be able to offer on a low to high value on a qualified loan via either a small business owner or an investor?
Yeah, there's a wide gap there, and that's why I brought in the micro lending component, and then there are various programs. So I think that Bianca said that the smallest that they would do would be about $500.
For my loans, it would go from 500 up to 100,000. And then we have a large loan division with a gentleman named Michael Coulter. For SBA 7A Community Advantage, we have SBA 504, and then we have a larger loan division that would go up to $5 million.
Yeah.
You're
Yeah,
welcome.
so the SBA will guarantee loans up to $5 million. That's SBA, though. That's the SBA world. That's not the whole banking world. Okay? And if anybody else wants to chime in on the range of their loan sizes, Axiom?
I can go, yeah. So for Acción, we do loans as little as $500 up to $2 million. That is a big range. Usually our loans above $500,000 are commercial real estate or really heavy equipment purchases. Outside of that, we do work with the Small Business Administration, the SBA, in their Community Advantage program. That's the only SBA program that we do, and those are loans between $50,000 and $250,000. So if it's not all of our loans are backed by the SBA, we have our own lending dollars that we're okay with lending and not having a guarantee on like with the SBA. That's a small portion of like our portfolio.
Keone?
Same with People Fund. Our lowest amount is $500 up to $350,000 through People Fund. If we see that you need to be in a different program and have it guaranteed by the SBA, their micro loans, we go up to $50,000, $250,000 on a Community Advantage, and with the SBA 504 up to $5 million.
So we've done loans as small as $100,000 for accounts receivable. We don't see anything too much smaller than that. We'll refer them out to our business partners here. We could go up with our own funds up to about $15 million for one business. So yeah, we have a wide range of amounts of money that we could lend out.
Yes, ma'am. Mm-hmm. Yeah, I believe that's a totally separate than what our panelists are doing up here. But thanks for sharing that with us. That's another resource. And I know that everyone up here covers at least the Texas territory as far as their footprint. But many of them are multi-state. if y'all want to.
Yes, we do serve. Our home base is here in San Antonio. We do have offices here in Houston, Austin, San Antonio, Dallas, Fort Worth, El Paso, the Beaumont area. And then we have other states we serve, such as Tennessee, Florida, Georgia, New Orleans, about 13 states. So I would definitely suggest going to our websites. Liftfund.com is ours, and you can see the states that we service.
And Acción, we do loans all over Texas, but we're also in 4 other states. So our headquarters are in New Mexico for the division that we work with for Acción, and we're also in Arizona, Colorado, and Nevada. And while we don't service that specific loan, we do have an internal veterans loan kind of fund. So I think all of us pretty much still kind of work in that space, whether it's through the SBA or maybe other programs, or even then internally the programs that we offer for veterans.
People Fund is Texas headquartered and Texas focused. We have our head office is in Austin, but we also have offices in Rio Grande, Dallas, Houston, Laredo. The other one is slipping my mind, I'm sorry. And we're constantly looking to expand. So with me being over rural initiatives, we're trying to stretch out into the Lubbock, College Station area, Midland, Odessa. So basically we're Texas focused.
Spirit of Texas Bank is a community Texas bank, so we're focused just on the state of Texas when it comes to our in-house lending, our conventional lending. But through our SBA back program, we can lend anywhere in the nation.
And San Antonio would be that other location.
Yes, ma'am. If I understand your question correctly, you're talking about purchase order financing or invoice financing, and it varies from institution. Some banks are equipped to work with businesses that are working under those conditions, and some aren't. Some aren't interested. I'm not sure if anybody on the panel has had a situation where they work with purchase orders, but I know that there are some lenders in the market that will.
Our bank particularly does not. That's more of a factoring, I believe, kind of thing that you would probably have to look into. But yeah, our bank particularly does not work with these types of loans.
With that, I believe it's time for lunch, unless we have, maybe we can, one more question, maybe? Yes, sir.
Do you have any kind of loans by industry, like construction, retail, because they are all the same? Good question. Any kind of specific loans?
Elias?
I think the type of loan, I mean, the terms of a loan, it vary. What you're using the loan for is they're two different things. In my case, if you're needing a construction loan, a development loan, purchase a commercial real estate property, an accounts receivable, that's, we have that type of loan for everyone. The terms on those loans are very similar, so it's just two different things. Like I said before, we just have a vast variety of loans that we offer with different terms. I mean, we could be here for hours just discussing the types of loans and the types of what you could do with those loans. So.
And we have, Acción has like a specific like transportation loan, and then for retail or businesses that have like a lot of credit card transactions, we have we work with a third party. It's called our Zip Pay loan. So we can kind of take some of the payments from like the credit card transactions for the day in very friendly and accessible ways. So I think depending on who you're working with, there may be specific programs that make sense for industries. But in general, a lot of our products are structured to service all the industries and be friendly and accessible for those industries.
What's most important with industry are trends. Most conventional credit writing policy with banks and lenders is that you have to still meet all the requirements that their underwriting department requires, regardless of the industry that you're in. Okay? So you have to meet your cash flow requirements. You have to meet, in some cases, collateral. It depends. It depends on what type of business it is. But there's really no financing that's just industry specific that has its own underwriting policy, if that answers your question. Yeah. By the way, someone, I think from the last panel, left their cell phone on the stage up here, in case you're here. That would be, okay, we're safe and secure. We want to thank everybody. Give our panelists a hand. Thank you for coming out.